Well, good afternoon, everybody. How you doing? I'm here with my good friend, Mr. Charles Moon. I'm Mike Shorr. Welcome to Market Minds. We are filling in for our other good friend and our CEO, Scott Bauer. But let's see, what do we got today? I mean, in whole, the markets aren't really showing much of a reaction. You know, we saw some pretty angry selling early on in NVIDIA. Microsoft earnings, mostly on computer sales, if I remember correctly, they're down like 6.25%. Meta holding in there, holding us up here. They're up about 1.7%. And then the numbers came out. They were just kind of a mixed bag. You know, we had GDP that came in a little bit light, but the expenditure part of GDP actually came in line. Those in line expectations were a little bit higher. And then initial claims came in a little bit lighter, continuing claims. And then that pending home sales, they were looking for flat and they got minus 5.5. That's down 5% on the year. So and we kind of came off on that. And I didn't think that was such a bad thing since housing prices have been so sticky. Maybe we're finally getting between the pricing and what mortgage rates are now, maybe we're getting a little bit of softening there, and everything else can kind of stay up. But we've seen buyers and sellers in here today. Gets a little bit volatile. Sometimes it looks like the sellers are just going to take this down to zero, and then the buyers come back and they V-shape this thing up. Now we're just kind of in the middle of the distribution today. But let's see. I think, Charlie, we were going to do some rapid fire, yeah?
Yeah. Why not, folks? So listen, I see that there's a lot of people in. Look at that rapid fire. Do me a favor, folks. We're going to get this started early and often. If you have questions on stocks, questions on the markets, questions on if NVIDIA is going to go up or down, questions about Apple earnings, do me a favor, get it in the chat. Mike and I will ping pong back and forth between these questions, and then we'll get to the good old word of the day.
Yes.
What up, Jake? Nice trade in Tesla, my man. Jake just nailed that little ripper to the upside.
Man, $6 rally. Nice, Jake. Man.
Jake the Snake.
Yeah, what are my thoughts? Let's see. Charlie, you want to start? Or do you want me to? We got
go ahead. You can take the first one.
All right, sure. Upstart. And Charlie's going to put up his chart. Mine is similar to Charlie's.
I'm getting it up. Right, meow. There you go.
All right, so Upstart earnings are on February 11th, so got a little bit of time here. And really what we're looking at is something that is just kind of, at least for about, it looks like the last 8 days or so, it's been stuck with support below its 20, or just below its 20, and then the 50 has been resistance. It wouldn't surprise me if we kind of just stayed in this consolidation. I mean, I know that's going to be for almost 2 weeks here, but it really is sideways. And as earnings get closer and closer, you're going to see people chewing up their positions, which usually means some sort of consolidation range. I mean, I'm trying to see. Now we covered that gap. We do have a little bit of a baby gap after that big gap from last earnings. We have a baby gap to the upside that happens at about 61 down to 59, just a little one. I mean, this would, I guess I would say if we break out appreciably over the 50, but just looking at this and knowing that earnings are coming up, this would probably be a no trade for me.
Yeah, I mean, it's pretty clear cut, the resistance there. It could get a little frothy above that level, but
yeah, that's what I was saying. But
the question is, can they? And so far, the answer is so far no.
No, they haven't. And then, like I said, with earnings coming up, that's going to be in the back of ever, maybe in the front of other people's heads.
Yes, sir. Okay, same question or same person. Affirm Affirm's looking good. I don't know if this is riding on the backs of earnings from Mastercard. Uh, fintech is generally thought to be really good. Surprisingly, there's been a stock called XYZ. I'm sure everybody actually knows who the stock is. It's SQ, also known as Square Inc. or Block, but XYZ was sorry, XYZ. They've been on a pretty good run here as of late. And, if we look at Affirm and UPST, Affirm is definitely trading a little bit stronger than UPST. However, it's running right into that same key technical level up near that linear regression channel. And respectfully, I would expect the same outcome as UPST. These two are generally married at the hip. So you got a little bit more room to run 63, 64 after that. A nice little profit pocket up towards that 68 threshold. Mike says the same thing here, coming up to earnings. The question is, are we seeing, these short sellers have been piling the stock down, looking to take profits, which will allow the stock to get a little bit more vertical going into earnings? Or are we going to see the last the traders from the last 3 or 4 days start to cash out right here, and then we see that retracement down? So right now, easy projection is to the 50. They should get there, but the question is, what is it going to do afterwards? They reject, I will look back down towards 58. They break out possibly up to 67.5. Mike, I got Rivian next for you. RIVN.
Boy. All right. Well, another one that's a bit of a mess. We got earnings coming up. They're on the 20th, so we got some more time there. Put in these highs up at 1665, and we are about $4 below that. Caught support at the 200 and has not been able. I think that this one maybe has a little bit of, since we got more time till earnings, using that 200 as a support level. That helps. And then I think that if we break out above that 50-day, that's what took us down to the 200. So that's at 1304. You're going to catch a little bit of resistance because you see what happens there with the 20-day moving average, and that's only at 1365. So really, you got 50 cents if we break out above the 50-day moving average until you're going to see some resistance. It looks like since it's gone through its 20, it's come up to it 1, 2, 3, got up and came back down 4. So really, I think that it's a little bit bullish just because of that support there, but I don't think that there's a big run to the upside until it gets above that 20. Then the air gets a little bit cleaner, but you're really congested in here. But it should hold that 200. It's got the 100 right below it.
Yeah, good support, but no indications are going to break up yet. Need a little bit more, right, Mike?
Mm-hmm.
Okay, so let's look at DJT really quickly. DJT, the problem is that everybody bought into the stock thinking it's going to go up once Trump was inaugurated, and it's been the exact opposite. And I hate to say it, folks, but you could see the absolute resistance in the picture. And more so, what's really kind of alarming is that this weakness is getting stronger, meaning that resistance is following the stock price lower. And so effectively, this 29 half level is going to be really important, because otherwise that's going to bring it down to that recent low where it kind of started getting a little nutty from down to 26s. And anything after that, folks, there's a lot of downside to be had. We're talking about possibly 21, 22, maybe even back into the teens. So, first and foremost, let's not trade like that again in terms of pure speculation. That was, in my opinion, a 50-50 coin flip at best. The stock does have to recover. The first step is getting above the 200-day moving average. The effective breakout could take place above the 50-20. That means we're going to need to see this pump up through what 35
35.
half.
Yep.
35 half goes for that gap fill right here at 40. And that's pretty good upside. After that, obviously, it could get really crazy, but there's just a lot of short-term ceilings that the stock's going to have to get above. So noteworthy, very popular, extremely weak right now. I am not bullish on it whatsoever.
No.
Mike, I have
No.
MMM for you.
3M.
Parabolic. Holy cow.
All right, we are past earnings. Earnings were on the 21st. Well, it's clearly bullish, and if you're not in, then you've missed the boat on this. I mean, if you want to go buy, high after high. I mean, let's see. Let me look at a weekly chart here, and let me squeeze this up.
Pull this up.
So the last time that we were back at these levels was in 2021. So you're asking yourself if you can, if you're going to go and take out. I mean, these are whatever 4-year highs. So bullish, but like I said, I think we missed the boat here. If you're looking for a pullback, well, you have I mean, the gap bar really isn't there. The gap fill isn't really, gap bar isn't relevant anymore since we've just continued straight up through that. So then you're looking at what those old swing highs were at 140, 135-ish. If you're looking for a pullback buy, that's almost like that'll probably be close to a whole reversion entry too. But I mean, there are some stocks that are just so far gone one way or the other that you just have to wave to them and wish them good luck. That, you're kind of crazy. It's bullish, but, do you want to go and buy 4-year highs? Maybe. It might go higher, but I think that there's probably other things out there that have a better outlook for you there than just to say, well, it's bullish. I don't care where the price is. It's okay not to make a trade. And
right.
We trade at what we at least perceive as value. I mean, sometimes we'll take a breakout, but that breakout is usually not into 4-year highs.
Right. And that's key. Like, what's the likelihood of it actually going down with the RSI being so high, right? And the RSI is in oversold territory on the weekly chart as well. So, when stocks go up fast, they come down fast. And when things get cooked, and now we're at this really important price zone, I mean, it wouldn't surprise me to see a roll from here. Mike certainly knows this price level. He called it out right now. Can it break out above 154? Yeah, it could get above, but again, historically, when it breaks these highs, you see buyers rush in, and then all of a sudden you see the institutions use them as exit liquidity and just dump on those that are chasing. So just be careful, is what Mike is saying, right?
Yeah. They got if they took it into earnings, they got the move from 141, up to here, which is a big move in a stock like 3M. Post-it notes aren't really going too far on us. And I know that 3M does more than that. But, I mean, that's, get everybody all jazzed up and everything. This thing's really bullish, and then slam it. And because
you got that right.
And because institutions know, they know that, it's much easier to shake out a bunch of retail traders than it is to shake out a colleague of theirs. Morgan is not going to take out Goldman Sachs very easily, especially when egos get involved. But yeah, like I said, clearly bullish. I'm not saying that it's going to turn around right here, but diminishing returns.
All right, so question is Apple going into earnings. Well, Apple was really strong at the open, and it's kind of just gone neutral, rejected at the 50, no acceptance above. So projected move somewhere between $9-10. There's a lot of signs that says Apple could surprise, and then Wall Street has kind of said we're not sure. We've seen a huge pullback on Apple with a strong bounce back as it approached the 200-day moving average down here. And now that we've kind of made that bounce between the 200 to 50, we're seeing a lot of profit taking going into this afternoon. Foxconn had reported strong numbers. QRVO, a pretty big component maker for Apple, crushed it on earnings. So there is some signs, right, that Apple could surprise, I guess, relative to iPhone sales. There's been a lot of reports that sales have been flat. iPad sales have been flat. I've seen that MacBook sales, the price has been slashed. So usually when Apple's putting items on sale, it's usually because they're not moving. The growth story with wearables is kind of worn out. So where is Apple's growth cycle? I mean, listen, for earnings, generally everything ties directly to one thing and one thing only, and it's always iPhone sales. Um, I will state that this new update with the Apple Intelligence integration is
Yeah.
really cool. I really like what Apple's done, but I don't know if that's enough to move the needle. So let's see. If it breaks out, your upside potential is around 250. That puts you at the linear regression mean, right into resistance, also right near the top of the channel.
Yep.
If it breaks down a little bit further, that puts you into this 230 range. But if you notice, if we look at where 230 is right here, there's really no technical support. So the fallout could be pretty severe. It could bring Apple right back to where they had rallied from. The upside, expectations have to be a little tempered. Downside could be very problematic. It's something to be very aware of. Do not know, by the way, whether that's going to be the case or not, but it's something of concern. By the way, folks, if you happen to like what you're hearing from us and you've been tuning in every day, we ask you to do the same thing. Smash that like button, folks. It helps us. Keep up the chat. Keep that chat firing up. That helps us as well. That gets us into the algorithm. That gets a lot of new people that wouldn't normally watch us to be aware of us. But the word of the day is going to be smash. And is that what Apple's going to do to the NASDAQ today? Are they going to smash it, or is Apple going to smash the short sellers? Smash. All right. So let me bring back the chart, Mike. IP. IP is the next name.
International paper? I
believe
so.
IP. Yeah. It's a huge move today on earnings.
Yeah, they're down one. Earnings today, or are they today after the close?
I think they reported earnings this morning.
They reported earnings this morning. We saw some profit taking, right, going into earnings for the last 3-4 days after putting in almost those highs up at 60.15. Trades down, and then now we're just back into the middle of that range. Between 52.70 and 60.15. I'm sure that implied volatility's come in a lot, so I don't think that playing this as a sit and stay, because they would have smashed whatever vol was in it. I mean, all the three major moving averages, and if you include the 20 in there, all four of them are now upward sloping. But again, you're talking about a move from 57 to 60, which isn't, a teeny move or anything like that. But you're gonna have some. If you get long in this area, then I would definitely be looking to, at the very least, tighten up my stops up if we get in that 60 area again, because that area has failed 3 times. Give or take a few cents here and there. So I guess cautiously bullish, but not really an interesting stock. I mean, these. They just don't move all that much, so it's not all that fun.
Yeah, and it looks like the buyers that came in on the dip accomplished what they wanted, right?
Just right back where they were. That's fine.
Yeah, we'll see.
Yeah.
I'm with you on that one.
That implied volatility is now in the lower quartile, which means that implied volatility's been higher 75% of the time over the last 52 weeks. So selling an iron condor, you don't want to do that with implied vol very low. So maybe a calendar spread, a 60 straight calendar spread.
If they could get past the gap fill.
Right. They got to
You
get
don't
past.
want it, that's the key. That's going to be the kind of the sign that they're going to make a run for 60. Because if they start turning down now, I mean, it's probably going to come back to retest that 50.
Yep.
Visa. What do we do with Visa? Well, I'm with Mike. I mean, what are we going to do, guys? Buy the very peak after an extended blowout breakout? It's a strong breakout. Listen, you could see there is a very quick double top. You could even kind of consider it a triple top as it rejected here, but very bullish maneuver, closed and open, almost pretty much use those highs as support, and just has been on this extended run. Extremely bullish. They report earnings today. Well, the
Yeah.
thinking is MasterCard did well, they'll do well, but how much of their earnings beat is baked in, right?
Yeah.
So, this could be one of those. They do well on earnings, and we wake up tomorrow down $5-6. Valuations matter at some point, and as frothy as this is, one of the things that I always tell people in my room, if you're trying to go long on stocks that are at this peak value, their numbers have to be pretty much perfect. Otherwise, it gives traders, investors, institutions a reason to go risk off as opposed to risk on. So,
Yeah.
I don't know what the expected move is. Let me pull up my other platform. Visa's expected move is pretty much the same as Apple, nearly $9-10. I don't know.
Yeah.
$350
stock. So you're talking.
Yeah, they're expected to go up, but I just, a lot of that could have been baked in today with how MasterCard had reported. Mike,
I don't know who the heck's buying this thing like this into earnings. I mean, there's just way too much. There's way too many things that can, like Charlie said, it needs to be perfect for it to even hold here, much less go up another 3-4%.
Right.
I think that whatever Visa's doing, they're doing it well, but that doesn't mean I just go and buy all-time highs. They're not all-time, 52-week highs.
VST for you, Mike.
What's that? I'm sorry.
VST, Victor Sierra Tango.
VXT. VXT?
No, Victor Sierra Tango. VXT.
Vistra. I mean, I like it. It's volatile though. We did break out above the 50 yesterday, and we've continued. We blew right through the 20. That swing high that was back on right around Thanksgiving, 11/22 or so, blew right through that, and we still have to take out this ATR. So on that pullback down where it found support at the 100, earnings are coming up. Where are they coming up? No, that's February 27th.
Yeah.
So you got time there. I mean, I continue to like. I love the company. Maybe a pullback to that swing high at whatever 168.60 or something like that. A little bit pullback here, but that ATR is still above. We're sitting right here at the 1 hour SMA. We've already got through the 200-hour SMA. We're sitting there right now. We're above the 200 EMA on the hourly. I mean, it might be worth a shot here. Just it's not a layup, and not like any trade is a layup. But I mean, you're just kind of hoping, and for decent reasons. But it's volatile as heck. I wouldn't be turning and selling it here. So either it would be vertical spread to the upside, or just a no trade and wait for a pullback to, let's say, the 50-day moving average at 156.
You don't want to chase this. I mean, this thing is up $40 almost in several days.
Yeah.
A few of us are in on this. Great hold. There was a great chance today, right at the lows, as they bounced and used the 50 SMA to smash higher. There's a gap fill up there, but at some point we face buyer's exhaustion, right? And they're already starting to take a little profits at that linear regression mean, at the 200-hour SMA as well. So we're at a critical price. We'll see if we can push through. We're going to do a couple more before we get to the word of the day. But before that, folks, I want you to know something here, okay? Let me change the slide. Today, after the close, folks, at 4:30 Eastern time,
Yeah.
3:30 Central, we would love for you folks to join us at the month-end coaches roundtable. It's going to be with our CEO Scott Bauer, Mike, myself, and Mike Patton. For those of you that are involved in Funder, all four of us will be jibber jabbering. We'll be able to take questions, kind of explain what we do for those that are not familiar with what we do. And you'll get a lot of exposure into all of the coaches here and what we provide in terms of education and opportunity on a daily basis in all of the trading rooms. So again, 4:30 Eastern, shortly after the close, 3:30 Central, 2:30 Mountain, 1:30 Pacific. All right, folks.
Nice.
I think I covered all the time zones. All right.
These two are Hawaiian students.
I don't know what time it is in Hawaii. Don't ask.
It's earlier.
All right. AVGO. Listen, the one thing that I've been warning a lot about has been NVIDIA and AVGO. And yes, I'm sure myself, along with the other coaches, are rooting for this up because of all the interest from obviously our student base and people that have been buying in on these dips. But there is a very cautionary tale to this because regardless of how much DeepSeek had spent to get their AI model going, now that it's running extremely efficient. And that's the key here is the word efficient. Right now, around this whole ecosphere of AI, things haven't been efficient, right? We need more power. We need more powerful components. We need more of these powerful components to, process data faster. But if the attitude now changes, if now companies like OpenAI, Microsoft, Meta, and Tesla recognize they could start actually operating more efficiently, this is not good for companies like AVGO and NVIDIA in the near term. In the long term, right, because we talked about the Javon's paradox, in the long term, it's going to be probably extremely explosive for these companies, but in the near term, it may be problematic. This is why names like AVGO and NVIDIA continue to get faded down or have struggled to kind of come back, like names like VST or Oracle or OKLO, which I think Mike and Scott just crushed in the near term. So this is where I'm throwing out that cautionary tale. Temper your expectations because clearly Wall Street doesn't feel right as nearly bullish as a lot of people have speculated. They continue to find a lot of selling pressure. As you can see, NVIDIA keeps kind of flipping back and forth. They're now back under the 200-day moving average. And again, that's a threshold they haven't been under in nearly 3 years. So keep that in mind. Mike, AMD, and then we'll wrap this up.
All right. Well, AMD is going to be a little bit of the same story. I mean, even when things were going well, AMD was the laggard here. And I mean, it just looks like a staircase down. We're not even getting to any sort of key resistance. We're mostly getting resistance here at this 20-day moving average, which is just kind of following this Donchian channel down. If they keep this up for longer, we're going to be below $100. It's tried to break out a couple times and got over, and then just stymied and hit. So, and then now we got earnings. So, I mean, that might change everything. Earnings are the 4th. So yes. Earnings are the 4th. I mean, I wouldn't be surprised if we saw a little bit of a relief rally here going into earnings, just because there's probably a lot of shorts, from this 140 area or something like that, kind of tighten things up. But as far as like an actual reversal, I mean, you might be able to catch a little bit of a move to the upside and selling it down here just the same way that, we're not buying 3M up at the highs. You're selling this off of recent lows. You're selling it, whatever, $6 above the recent lows, which are pretty darn low.
Yeah.
So this would be, you might have a shot, with depending on how earnings, how the options line up for that. Maybe a cheap shot to the upside, just Not that it's necessarily bullish, but it's so darn low
Right.
on a reward to risk basis. And selling it down here just doesn't make a whole lot of sense to me. Resistance up at 128, 127.5. And, if you got it there before earnings, maybe you take a short-term short. But I don't think that this thing is turning around and busting up to 150 anytime soon.
No, they need a catalyst, right, Mike?
They need something fundamentally to change the perception and the reality of what they've been.
They're looking a lot less like the old AMD and looking a lot more like the new Intel.
Yes.
They're just collectively just getting absolutely pummeled down almost daily. It's unbelievable, but they need something. They need something to, bring that demand and interest back.
That interest or that spark or something.
Yeah, something. All right, folks. So let's get the word of the day. Wheel of names. I wonder if it's going to be the same one as yesterday. Sometimes it seems like that. Good luck, everybody. Let's see who today's winner is going to be. It is going to be Big Frank. Oh, Big Frank. What's up, baby? Frank Belmont. Do me a favor. Reach out to Prosper Swag at prospertrading.com. Get us your info so we can get your swag out. Really cool, Frank. We actually got a new name today. And again, folks, don't forget to join us. Mike, do you have the link for the oh yeah, he posted it. This is the link, folks. Again, make sure you click that link. Join us this afternoon for myself, Mike, Scott Bauer, and General Patton. It'll be really informative. It's going to be really fun, somewhat action-packed, and more than anything, you're going to get a good feel for what all of us coaches do on a daily basis. On behalf of Mr. Mike Shorr, myself, and the great Scott Bauer, we'd like to say thank you. Thank you for your time. Don't forget to hit that smash button and subscribe. And until next time, everybody.
Thanks. Catch you later.